Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Live Nation Entertainment Inc. Annual Report. Live Nation Entertainment Inc. offers a diverse range of businesses and services through its concerts, ticketing, and sponsorship and advertising segments. The company's primary focus is on live music events, which it promotes in owned or operated venues as well as rented third-party locations. This includes operating and managing music venues, producing music festivals, creating associated content, and offering management services to artists. The ticketing segment provides ticketing software and services to consumers through various platforms, including mobile apps, websites, and retail outlets. It also offers ticket resale services for a wide range of events, such as concerts, sports games, and performances at arenas, stadiums, and theaters. Additionally, the company manages ticketing operations for professional sports franchises, college sports teams, museums, and theaters. The sponsorship and advertising segment sells sponsorships and advertising placements to international, national, and local brands. This includes signage, online advertising, promotional programs, and rich media offerings that integrate with live streaming and music-related content. The company also develops strategic sponsorship programs and produces custom events or programs for specific brands. Furthermore, Live Nation Entertainment owns, operates, or leases entertainment venues, providing a comprehensive range of services to the live entertainment industry. Unfortunately, I don't have access to the text you provided. However, I can still provide a general overview essay on what could cause a stock price to increase. Live Nation Entertainment Inc.'s stock price has increased slightly in the past year due to several factors. One major reason is the company's successful expansion into new markets and venues. By acquiring or partnering with other entertainment companies, Live Nation has been able to expand its reach and offer more diverse events and experiences to its customers. Another factor contributing to the increase in stock price is the growing demand for live events. As people become increasingly disillusioned with digital content, they are seeking out more immersive and interactive experiences, such as concerts, festivals, and sporting events. Live Nation's ability to capitalize on this trend has helped drive revenue growth and boost investor confidence. Additionally, the company's focus on creating a seamless and engaging experience for its customers through technology has also contributed to its success. By leveraging data analytics and digital platforms, Live Nation is able to better understand its audience and tailor its offerings to meet their needs, resulting in increased ticket sales and customer loyalty. Overall, Live Nation Entertainment Inc.'s stock price increase can be attributed to a combination of strategic expansion, growing demand for live events, and innovative use of technology. Live Nation Entertainment Inc. maintains a market capitalization of $38 billion, broadly in line with the industry peer group. Live Nation Entertainment Inc. trades at a higher price-to-earnings ratio of 118 times and a higher price-to-book ratio of 72.16 times relative within the industry. This makes the stock appear much more overvalued compared to its peers. However, the broader industry is also trading at elevated valuation levels, suggesting sector-wide optimism rather than company-specific overvalue. Investor should evaluate if the stock is worth its premium price. The company exhibits a very high leverage profile, with liabilities accounting for 90% of total assets. This elevated debt level warrants heightened caution, as it may limit the company's financial flexibility and increase risk during economic stress. We have to further examine the industry and the nature of the business to determine if they justify the current valuation. Liabilities have increased, while assets and equity have failed to keep pace or declined. This suggests the business is not growing and may be in decline, making it a highly unattractive investment from a risk perspective. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth or decline for Live Nation can be summarized into several key areas. On the growth side, ticket sales play a significant role in driving revenue up, as do successful artist tour and related earnings. Strong relationships with clients and expectations for future ticket sales also contribute to revenue growth. Additionally, strategic acquisitions and long-term contracts with clients or vendors that generate revenue over several years are important drivers of growth. On the decline side, refunds made or committed to, event cancellations, and foreign exchange fluctuations can all lead to a decrease in revenue. It's worth noting that convenience and order processing fees, as well as service charges from ticket sales in both primary and secondary markets, drive revenue growth in certain segments. In terms of segment-specific drivers, the concert segment is primarily driven by ticket sales, artist management commissions, and merchandise sales. The ticketing segment sees revenue growth from convenience and order processing fees, as well as service charges from primary and secondary markets. Finally, the sponsorship and advertising segment is driven by strategic sponsorship programs, placement of advertising, and exclusive access rights. Overall, Live Nation's revenue growth or decline is closely tied to these key drivers, which highlight the importance of successful ticket sales, artist touring cycles, client relationships, acquisitions, and strategic contracts in driving revenue. Net income experienced a mixed trend between 2024 and 2025. On one hand, it increased by 15% from 2024 to 2025, according to some reports. However, other sources indicate that net income actually decreased in 2025 compared to the previous year. The discrepancies are evident with varying dollar amounts reported across different pages. Despite these inconsistencies, profit margins showed a more consistent trend. Profit margins increased from 7.9% in 2024 to 8.2% in 2025. This improvement was also reflected in operating income and AOI, adjusted operating income margins, which rose from -2% and 2.8%, respectively, in 2024 to 0.4% and 3.3% in 2025. The increase in profit margins suggests that the company's operational efficiency improved during this period. The company's financial performance is a testament to its ability to generate significant operating cash flow. According to the provided data, the company has consistently produced positive operating cash flow in recent years. In 2025, the company generated $7.1 billion in cash flows from operations, while in 2024 it was $6.1 billion. Furthermore, a closer look at the financial statements reveals that the company's operating cash flow has been steadily increasing over the past 3 years, with positive figures of $1,395,316 in 2025, $1,725,175 in 2024, and $1,362,974 in 2023. This trend is a clear indication that the company is generating sufficient cash to meet its operational needs, positioning it for long-term success. The company's financial health has undergone significant changes in recent years. A notable trend is the substantial increase in its debt level. As of December 31, 2025, the company's total debt stood at $8.3 billion, a stark contrast to the $6.4 billion recorded in 2024. This upward trajectory is further emphasized by the 26% increase in the total principal amount from $6,491,377,000 to $8,268,659,000. The rise in debt can be attributed to two primary factors: the introduction of a new Term Loan B facility and the repayment of prior credit agreements. This strategic move has undoubtedly contributed to the company's growing financial obligations. Furthermore, the total debt figure for 2025 stands at $313,038, indicating a substantial increase from the previous year. While interest expenses have not been explicitly mentioned as having changed significantly, the increased debt level is likely to result in higher interest payments in the future. This development warrants close monitoring and may necessitate adjustments to the company's financial strategy to mitigate potential risks associated with its growing debt burden. The performance of various segments and regions within the company has been mixed. On a positive note, the concert segment generated $20.9 billion in revenue, marking a 30% increase from the previous year. The ticketing segment also performed well, with a 3% revenue increase. In terms of regions, North America stood out as a strong performer, driven by exclusive rights to sell tickets and growth in sponsorship and advertising revenue. Australia was another region that showed promise, thanks to its exclusive rights to sell tickets. International markets, including Europe, Mexico, and Asia, also performed well, particularly with regards to naming rights and sponsorship deals attached to new venues. However, not all regions fared as well. emerging markets posed significant challenges due to political instability, adverse diplomatic relations, and unfavorable economic conditions. In contrast, the live entertainment business and artist management business segments struggled, with no specific details provided on their performance. International markets also performed poorly overall, despite some notable successes in certain areas. The varied performance of these regions was attributed to risks associated with legislative, judicial, accounting, regulatory, political, and economic conditions. Management's outlook for the company is centered around growth and expansion. They believe they have a strong global footprint and see opportunities in music advertising and e-commerce. To achieve this growth, management aims to connect artists with fans, sell more tickets, and partner with sponsors. This will be achieved through expanding concert platforms, improving ticketing platforms, and investing in venue infrastructure. The company's long-term success is also dependent on its ability to lease and develop live music venues. Management expects to continue making substantial capital improvements to meet increasing demand, improve value, and grow revenue. Financially, management has sufficient flexibility to fund fluctuations and access global capital markets on satisfactory terms. In terms of specific goals, the company expects to spend approximately $1.1 billion to $1.2 billion on capital expenditures in 2026, with a significant portion dedicated to revenue-generating projects. Management's outlook is also focused on consolidation and strategic investments, which will be accounted for under the acquisition method of accounting. Overall, management's strategy is centered around growth through expansion, investment in venue infrastructure, and strategic partnerships. This approach is expected to drive revenue growth and improve value over the long term. The company has made significant moves in terms of acquisitions and divestitures. In one notable acquisition, the company purchased an additional 24% interest in OCESA from CIE, a non-controlling interest. This move demonstrates the company's commitment to expanding its stake in key business ventures. On the other hand, the company has also been involved in several divestitures. One of the most significant examples is the proposed divestiture of Ticketmaster as part of a lawsuit filed by the United States Department of Justice and state authorities. This move highlights the company's willingness to adapt to changing regulatory environments and prioritize compliance with legal requirements. The company's financial activities have been documented in various sections. One notable aspect is its treatment of shareholder value. In terms of dividends, the company has chosen not to pay out any amount to its shareholders. On the other hand, the company has indeed engaged in share buybacks. This decision was explicitly mentioned on pages 81 and 88 of the provided documentation. While the exact number of shares bought back is not explicitly stated, it can be calculated using the available information. Concerns about inventory buildup or supply chain disruption are evident in the company's financial statements. A significant decrease in accounts receivable in 2025 suggests that customers may not be paying their bills on time, potentially indicating a cash flow issue. Furthermore, an increase in prepaid expenses and other assets could indicate that the company is stockpiling materials or supplies, which may lead to inventory buildup. The purchases of property, plant, and equipment also raise concerns about supply chain disruption. The substantial increase in 2025 compared to 2024 suggests that the company may be investing heavily in new equipment or infrastructure, potentially disrupting its existing supply chains. Additionally, the mention of ticketing contract advances on page 100 implies that the company is taking steps to mitigate potential disruptions in its supply chain. Overall, these indicators suggest that the company's inventory buildup and supply chain disruption are pressing concerns that need to be addressed. That concludes the financial summary for Live Nation Entertainment Inc. Feel free to comment below, and I will be happy to answer them when possible.